Welcome to DeFi House strategies section, and this one is for the beginners, especially for those that hold BTC as their main treasury asset. So you don't have multiple cryptocurrencies, you don't have USDC. Basically, you bought some Bitcoin way back, for most likely, or recently, doesn't matter, and you want to be doing something with your BTC, right? But you don't want to be using that BTC, but you want to be simply having it as a core, a treasury asset. And if your goal is to stack more BTC for the long-term perspective by utilizing DeFi protocols and low risk, this is the strategy for you. So first of all, I'm diving straight into it. If you have any questions, message me or watch all the previous videos. But this is the exact strategy to stack more BTC for long-term perspective by holding BTC as a main treasury asset. So first of all, you want to get some wrapped BTC, and you have basically two options: WBTC, which is a wrapped BTC, or cbBTC, which is a Coinbase wrapped BTC. You do that by simply wrapping your native BTCs, and there are multiple ways to do that. My best suggestion is to get cbBTC, which is a Coinbase wrapped BTC, instead of just a wrapped BTC, because first of all, base ecosystem is much stronger in my opinion, because in most cases, if you just wrap your BTC to wrap BTC, VBTC, essentially, you will be participating on a Ethereum mainnet related DeFi pools. I don't do that. I don't like that. I prefer base, cheaper transactions, higher volumes, better fees. So my best suggestion is to get cbBTC, and you do that simply by sending your Bitcoins to Coinbase and then withdrawing that to your base address onto your self-custody wallet, meaning that you will get cbBTC, which will be one-to-one backed as always. I mean, Coinbase is a very big supplier, so to speak, of the cbBTC, and whatever they have as wrapped, they have as natives. And then if you wish to convert back to native BTC, you then send your cbBTC back to your Coinbase, and they will automatically burn the cbBTC that you have and give you your native BTC one-to-one with the exact ratio and amounts. Okay, the wrapped Bitcoin works the same way, but in most cases you have to send your native Bitcoin to any exchange, centralized exchange, buy simply sell your Bitcoin, buy wrapped Bitcoin with the same amount, so you have the same Bitcoin but on the wrapped version, and then withdraw to your wallet. Okay, but as I said, I suggest cbBTC, and in this strategy I will be showing specifically pools for that, because they pay very good fees and they're very easy to manage. Then when you have your wrapped BTC, in this case I assume you have cbBTC, okay, simply sitting on your wallet, you want to be deploying that into the lending protocol like Aave. Aave is the biggest lending and DeFi protocol ever. Okay, they have more TVL than most of the banks combined, so this is a safe place. Of course, well, it's life, right? Anything at any time can happen, but Aave been extremely good. Never been involved in any kind of accidents in terms of the money being lost, whatever. They have very good systems, and it's very simple and extremely high quality smart contracts. They've been around since pretty much day one of DeFi for many years now, and they're doing extremely nice things in the future as well. So Aave is a safe bet for everyone pretty much participating in DeFi, wanting to lend and borrow capital. So you want to be deploying your money to Aave, then you want to be borrowing in USDC against your BTC. I suggest using maximum 50% of your available borrowing power, just to have your LTV ratio pretty much healthy, all right? Which means that if you borrow, if they give you $1,000 to borrow, you want to be borrowing about 500. So just you have some margin left, because if BTC value goes down in a worst case scenario, you still have a fairly big gap to it, basically to keep your position safe. But don't worry, even if something happens in the market, you can always repay part of the loan early and make your position safe, or you can add more BTC or more assets, okay, into Aave to make your health position better as well. So there is nothing to worry about. I explained all of this before, okay, so this is not about that specifically. Then you want to be deploying borrowed USDC into the DeFi LP, which is USDC versus cbBTC. So you will be earning the fees in both assets, cbBTC and USDC. Always claim the fees that you earned only in cbBTC. So essentially the protocol that I'm showing you will let you do that, and then redeploy that cbBTC back into the lending protocol, or simply hold it in your wallet, doesn't matter, to stack more BTC essentially. So let me show you all of that in action, okay? So first of all, you go to Aave, and now in my wallet I've deployed a bit of cbBTC, $365 worth of, but I still have a bit of Bitcoin on my wallet, just to show you how it works. So essentially when you go to Aave, which is I will leave everything down below, aave.com, you want to be connecting your wallet here. Then you will see assets to supply. So essentially, what do you have in your wallet? So as you can see, I do have about $550 worth of Bitcoin still in my wallet. I can click on supply and give the amount. So let's supply, I don't know, free, like that, $350, why not? Click on supply cbBTC, click on sign, confirm. So essentially you are sending, all done. Click on OK, close. And now as you can see, I have $730 supplied as cbBTC on Aave on base market. This is the setup that I recommend using base. So even though you are not getting much API here, because well, it's just Bitcoin, it's difficult to get yield on Bitcoin these days just by lending it out, but it's not about that. It's about getting access to borrowed capital. Now when you supply the Bitcoin, you are able to borrow any of these assets, as you can see. So this is USDC. You are able to borrow up to 527 by providing 730 in collateral. You never want to be borrowing maximum amount, because then if Bitcoin drops a bit, you can get liquidated, meaning the Aave will have to sell part of your Bitcoin to cover your debt. So you want to be borrowing, as I said, about 50% maximum. So in this case we have 730, so we want to be borrowing about 350 more or less. About 350 more or less will be pretty safe bet. So USDC, you will be paying 6% API for borrowing. This API is dynamic, it usually changes, goes a tiny bit up, tiny bit down, but 6% API yearly is nothing in comparison to what you're gonna be generating on these DeFi pools. So essentially you will cover this easily. Of course, you can do a bit of a hack or a trick, so to speak. You can borrow in euros, for example, for cheaper and swap back to USDC. You can borrow in ETH, which is even cheaper, and then switch back to USDC. But remember, if you have your debt as a volatile asset, you will have to repay the same thing. So you will borrow certain amount of ETH, for example, and if ETH increases, your essentially debt becomes a bit more expensive, right? So it's best to simply stick to the basics, USDC or any other stable that you can swap back to USDC. So let's borrow, let's say $350. So we will be sitting at 1.62 health factor. This is good. If you borrow 300, 189 is even better. You want to be keeping definitely above 150 your health factor, which means that this is basically the ratio between your collateral value and amount you borrowed. So the closer it is to 1, the riskier this position is. So 1.5 towards 2 is the best. So let's do 350. 162 is good. Click on borrow USDC. You will get this USDC into your wallet. 350. Sign confirm. As you can see, plus 350. We just borrowed $350, and now we will be deploying this capital. As you can see, now my borrows is 350, my API right here, and now you want to be deploying this into the pool. For this, I will be using the VFAT. As you know, this is my favorite way to manage the positions on pools, so I will be using VFAT for this example. On VFAT, you connect the wallet, you go to the pools. Make sure you are at pools and not the farms, okay? Because you want to be stacking more Bitcoin. Then you search for cbBTC, and now you will have all of the available options. Only 2 are important, this one and then this one, okay? What is the difference between this one and this one? The first one is at 1% fee tier, meaning that this will generate very high fees with less volume, and this one is 0.05%, which is way more active and way bigger pool, but will generate less fees, so to speak. But there is still a core difference in tick size. On the standard CL100 pool with 0.05% fee tier, you were able to choose the range every 1%, as you can see, every 1%. So you have more flexibility to choose, okay? Now on this pool, 1% fee tier, you are moving in 20% blocks. So not everyone will be happy about it. As you can see, if you want to add a bit more range, right, these are moving in 20% ticks, right, as you can see. So if you are happy to deploy USDC, okay, into the pool and have 20% buffer at least on BTC price, it's good. Then you can choose this one. It will generate much higher API. But if you tend to choose a bit of a different one and you want to have a bit more flexibility, let's say 5, 7, 10% change in BTC value, then you want to be deploying into this one, okay? For this example, I will deploy into this one, 1% fee tier, simply because I am happy to deploy that capital in USDC, give 20% lower, a 20% lower buffer on Bitcoin, and just simply, if BTC goes down, it can go down as much as 20%, which is a lot for BTC, extreme amount for BTC, and you will be accumulating BTC while it's in range, okay? So a price in USDC, so it's easier to see, okay? And as you can see, token to send, you want to be choosing USDC, okay, because you just borrowed USDC, and now you want to be deploying mostly in USDC, okay? So you don't want to be buying Bitcoin right now. You want to be deploying USDC and expect Bitcoin price to go down, right? So now, if we have this range with a 20% width, the current price is 121.8. The upper range for us will be 133.9 and the lower range 109. This is a pretty good range, okay? This is a pretty good range. In this case, let's do 350. Okay, so pretty much maximum amount. You will be adding liquidity, but because it's 133 upper range and 109 lower range, in this case you are depositing a bit towards more USDC, but kinda, I would say, just from my eyes, about 60-40. So part of your deposit will be swapped to Bitcoin, and then you will be deploying 183 in USDC and 165 in Bitcoin. So you will be buying 165 worth of Bitcoin right now. If you are okay with that at the current BTC prices, if they are not too high, it's good. You can do that. If you are not okay and you don't want to be buying Bitcoin at a higher prices, then you want to be choosing this pool, because in this pool, price in USDC, I can set the range from 122 and give more range to the downside, right? Just like that. And I have way more freedom in this case. If I choose USDC and I do 350, as you can see, it's calculating me only $35 will be sent to Bitcoin, and the rest will be added as USDC. Okay, in this case, Bitcoin price is slightly down. Let me show you. BTC, as you can see, we've been from 125 down to 121 right now, and because I'm showing you this as an example, I am happy to deploy into the pool like that, 133, 109, 20% ratio, and swapping part of my USDC to BTC. But it's basically up to you. Do you like to buy Bitcoin now or not? If yes, choose this pool, have this ratio, no problem. Because then in both cases, if it's going up or down, you will stack BTC in fees. Okay? If you are not happy about the current BTC price and you don't want to be buying it, then don't do it. 350, this is the ratio. Click on deposit. It will ask you to confirm a few transactions. Confirm. One more, it's a deposit. Wait for that. Another transaction, confirm, sign and confirm, and now it will add the money. As you can see, the transaction is now successful. So you are now deployed into this pool. You will be earning the fees in both assets. Now, what happens if Bitcoin is going up? You will be converted more towards USDC, as you know, but this is not the point. You are not here for the impermanent loss management, whatever. You are here to stack more Bitcoin, which means that the only thing you care about is being in range. While you are in range in between 133.89 and 109.6, you are earning the fees. You are earning cbBTC and USDC. My best recommendation for this would be to claim the fees every more or less every week or every few days, depending on the position size. If it's a big position, you can claim more regular, every 2 days more or less. If it's smaller position, then let the fees accumulate for a week, then claim the fees in cbBTC. And you can do that by going to your deposits right here. I have a few positions here available. So let me open the BTC, this one that we just deployed. These are just a mirror of my private wallets as well that I usually like to show in videos. So you are now getting USDC, cbBTC, as you can see. This is your amount, this is your range. This is your daily expected rewards. It will not be as high as this, don't worry. It's gonna be a bit less, okay? And this is how much you earned already. And now, to claim the fees in cbBTC, when you click on this position, you will click on Harvest, and token to receive, you wanna be choosing cbBTC, okay? And in this case, when you have a bit more fees accumulated here, you want to be harvesting in cbBTC. So you get in your wallet all of this amount, the earned amount in cbBTC. That's it. And you stack Bitcoins like that by keeping your main holdings here borrowed in USDC, and simply this Bitcoin just sits here, so it's giving you access to money, while that borrowed capital, these free $50, are working for you in this case, generating you more cbBTC, and you stack those Bitcoins for long-term perspective. Okay, this is a very simple strategy, very beginner-friendly strategy. Now, this is 2 pools to choose, as I told you before, 1% fee tier or 0.5. And now 2 simple tips just to end this strategy video. You can use part of the yield to always repay the debt if you wish. Okay, so for example, now you are free $50 in debt. You can withdraw this money at any time by clicking withdraw, of course, and get back to USDC, for example, withdraw all the money to USDC, okay, and repay the loan. And whatever you earned in Bitcoin is going to be your extra profits, right? Because you're stacking more Bitcoin. Or what you can do is, for example, if you earned here, let's say $20 or $30, right? You can harvest that in USDC or in both. I click on that and click on USDC plus cbBTC, which is going to be the standard one. You get 50% in that, 50% in that, for example, right? And you can use the 50% of cbBTC as stacking, just add more, and use the USDC to repay the loan. So then, I mean, as you generate yield, you are repaying the loan as well. So you could do that, or you can essentially keep the rest of the yield. You can stack more, or simply, I don't know, do whatever else you want with your yield. But this strategy is for stacking more Bitcoin. Or you can don't repay the loan, just forget that the loan exists, kinda, and always stack more Bitcoin, more and more. And then essentially, if BTC price appreciates, you can repay the loan using your BTC that you left as collateral, or by wallet balance, so basically by withdrawing the money from this pool. Okay, the worst case scenario right now, if BTC starts to go down towards, this value will become lower, of course, because you are converted to more Bitcoin, and if Bitcoin is going down, this will get less, but your fees will cover part of it, and BTC can now move freely up and down within 20% range, which is a very big range for Bitcoin, and essentially you will be earning the fees. So this is the strategy on how to use your current Bitcoins, if you hold them, to get access to more capital. Use that capital to deploy into the pools and stack more Bitcoin for the long-term perspective. You are stacking more BTC. Your goal is not to earn the yield and fund your lifestyle. This is to stack more Bitcoin. And then when you feel like you're done, you no longer want to do that, or you want to change the strategies, whatever, you simply withdraw the money from the pool, repay the loan, get back your BTC, whatever else you earned on top of it, and call it a day. Okay, so this is the strategy that I just explained. Hopefully it's going to be beneficial for some people that been buying Bitcoin and have no idea what to do with that beside holding. So now you can unlock access to more money and use that money to get more Bitcoin. Thank you, and I will see you on a next video.